All right, welcome everyone to another episode of Daily Live with the Mortgage Calculator, a lender and broker in over 20 states with over 200 loan officers that would be happy to help you out with any of the options we for today. But what we do every day is check out general market conditions, the live mortgage rates for all of our standard programs, and then we do a deep dive into a topic. Today we will be talking about condo loans. We love non-QM loans here at the Mortgage Calculator, and we have a ton of different options. And one unique options we can offer is a loan on a condotel, typically eligible under standard guidelines for any of the standard programs. So going over that today. Again, if you'd like a full breakdown, an itemized loan estimate on any of our loan programs, please drop a comment or reach out to one of our team members. They'd be happy to help you out. Let me go ahead and share my screen and we'll check out the live rates for today. I want to look at when we're talking about rates in general. This is the last 5 days for the 10-year Treasury. 10-year Treasury generally tracks with rates overall, especially when we're talking about kinds of different program options. So we typically want to take a look at the direction this is trending. And it's been a little bit upwards. Momentum is upwards with some of the news, but we always want to take that into perspective and see we're still at 1 year plus lows, and the rates don't always react instantly to the 10-year Treasury here, but it is a general indicator when we're talking about all kinds of different loan programs. Now let's get into the specifics. So we have our live rates here for all of our standard programs. So this allows us to compare all the different programs. There's dozens of options here. But what we do is we set up 500,000 purchase, 300,000 loan amount. That corresponds to 60% loan to value. We use a 760 FICO credit score and 40% debt to income. We can see all the different options for all the programs. Now, first up here is our conventional option for a primary home, 30-year fixed, which you standard mortgage loan. Coming in today, rates as low as 5.875, so generally lower than they've been for the last years, which is amazing. And here with all the fees, 6.111. Remember, we always want to use the APR to compare across the programs, as that standardizes it for all of the different fees that may be included. Qualify for a conventional, we typically want to explore an FHA, which does allow a little more leniency on credit issues and higher debt ratio, but does have additional fees for upfront mortgage insurance that is required. So FHA comes in today, 5.25. We were hoping to see that drop into the fours. Hasn't there yet. Final APR 6.13, a touch higher than conventional, which is pretty typical once you add those extra fees in there. And for eligible vets and active servers, VA is typically the best. Rates as low as 5.375, but you see final APR 5.627 has much lower fees overall for our veterans there with our VA loan. And our final, I would say, standard option, USDA, for properties in USDA eligible areas. The rural areas of the country are typically eligible. So if our borrower is eligible with income limits and the property is eligible, these are good options to consider. Coming in pretty low today, 5.125. Finally, 5.779 there. So we'll typically compare conventional for the customers that are looking in those areas. And now we'll get into our unique options. We love our non-QM options here at the Mortgage Co beyond the standard options there. And first up here is our alt doc options for a primary home. So typically our self-employed borrowers need these options to use alternative documentation, standard tax returns, etc. Don't show enough income, but we can use alternative docs such as bank statements, 1099s, etc. And we'll want to compare that to the same rate, 5.875 rate. And finally, PR 6.145. So non-QM is almost identical to conventional today, as the rates don't by the minute like conventional does. Our non-QM alt doc options can also be used for investment property. The next option here, we can get rates as low as 6%, 321. And we compare that to our conventional options for an investment property, coming in at 6%. Final APR 6.3. Well, there, just a touch cheaper. And the final option we'll go over today, our DSR. That is a unique non-QM loan option that stands for debt service coverage ratio, no income or employment needed. Simply use the estimated rents to determine the DSCR ratio. The property cash flows, aka the rents, exceed That's a ratio of 1 or higher, which is what we set for all these scenarios. And this first option has a 3-year prepayment penalty, which is standard for these more commercial type loan options. And with that prepayment penalty, 5.999, pretty amazing. Final APR 6.222, which is beating conventional and alt doc, which is pretty amazing. And we can add a 5-year prepay to lower it even more, 5.875 rate. Final APR comes in at 6.181. An option for no prepayment penalty. You see here, rates coming in at 6%. Final APR 6.321. So those are our options here. There's also of other variations in different loan types. I'm not going to go over that today. Our topic for today is going to be how our customer can purchase examples today. A property that is a condotel. So first, I wanted to pull up an actual property that's for here locally and found this pretty amazing property. This is at the Four Seasons, actually. So this is the Four Seasons private residence, I believe is what they call it. But that's their version of where some of the units are actually a Four Seasons hotel and some are owned by private owners, but participate in the hotel program. So that is a condotel. It has hotel-like features. Typically, that means a check-in desk. Another couple things to note and why reasons why I chose this property, but we're doing non-QM loan programs, so there's no necessarily limit necessarily to the max amount. There are limits because it is a condotel. There are a few features here. For one, the size. There's typically a minimum square footage size for condotels to be eligible for financing. So that's because it is at a Four Seasons. So 775 square feet is typically going to be over our minimums, which are going to be around 500 square feet. And this also a bedroom. So notice this actually has a bedroom. I don't know if you can see here in the picture if we pull it up, but you see there's actually a separate bedroom, which is also required for these programs. Another thing to look at here is we must have cooking, basically a kitchen. So it needs to have an oven and a stove. So boxes here, which some of the older or smaller units may not have full cooking, full fridge, etc. So it needs to have an actual kitchen. So those are some of the caveats for these programs, and that's why I chose this property. Great example. I believe it checks all the boxes. Pretty nitpicky there if we have some of the properties that are a little bit older. Many times they don't meet the square footage or may not have the right setup in order to be financed. So be very careful there, but this one does. So this is pretty amazing. Now, if our customer wants to purchase this for some reason as a primary home, definitely a pretty unique option to live in a hotel as a primary home, but it does allow you to do that because you can plug into all of the features of the hotel, which I'm sure some owners appreciate. So this is actually purchase a condotel as a primary purchase. We can do 15% down, and this is for this exact unit. And in this example here, I already went through the caveats there. 500 square feet is required for this specific program. It needs a full kitchen, which we did see there, and it needs a separate bedroom. Studios are ineligible. So those are the caveats for this program. And we are as low as 7% rate at 2.125 discount points and costs. And there's an option to go 7.875 rate and actually get a lender 5 back towards our closing costs. And that is for this exact unit at that purchase price. To put the 15% down, $225,000 down. We kept it at full documentation in this example. We kept it as primary, and we did that 760 FICO credit score that we were looking at before. So, very cool example for someone to live as a primary home and the Four Seasons hotel. Pretty unique option there. Now, the more common scenario, I would probably say, is to purchase a condotel as a second investment. In this example, I did an investment, the same limitations. So we used investment. We used full documentation in this example, 25% down payment for that exact unit. And same thing here when we switch to investment, max loan amount is 1.5 million, but we didn't hit that. This program does have a caveat with must be in a resort area or affiliated with the national hotel chain, which obviously Four Seasons checks that box as well. And we already went over the full kitchen and separate bedroom on our little preview there. So this option checks all those. And we're putting a little more down payment, so you can actually see the rates are a touch lower. 6.999 option costs 8.5 discount points it costs. And we can go 99 option at 1.875 in cost. And you see that's to purchase this at the 25% down. And all of the features there are set the same. And now we'll finish off with our most common requests. So most investors that are looking to purchase something as an investment are loving our DSCR programs. So I wanted to pull up one option using our DSCR. So our final option here is to purchase as an investment, of course, using the DSCR program, no income or employment needed. We simply, and we also added the 5-year prepay here, and we can still keep it down. The one thing to keep in mind is we do need to meet the DSCR ratio, so we need to be able to prove that our income can exceed the expenses for some condotels, but we can use the short-term rental income, but we do need some proof of that if we're purchasing. So hopefully the owners stats if we're purchasing it. So a couple caveats there, but if all the numbers work out and the DSCR ratio works, this is pretty much the same program as before. And you'll see the rates are a little bit different because we added the prepay. It actually sweetens the deal a little bit here. 6.375 rate is the lowest rate we can get at 2.975 discount points and cost. And we can go to a 7.25 rate and get a 1.105 lender credit towards closing costs there. And that's still the payment that we went over. And we did switch that to the DSCR program. And we did have that 5-year prepayment penalty. So those are the differences there. But some pretty amazing options. I would say most investors would take this option. This is typically the setup we'll do. But we do have to make sure our estimated income on that property can exceed these monthly payment features that you see me circling here. So some amazing options. Obviously, it would be very cool to purchase this property. Very cool options out there, and there are a lot of new properties, especially here in my area, Miami, Fort Lauderdale area, changing into the short-term rental properties. That's kind of the biggest craze with, we have a lot of condos here, and then a lot of the newer condos are choosing to go with the option to allow short-term rentals, which typically puts them in this condotel category. Next show, we'll be going over non-warrantable condos in general. So there are a lot of condos, especially Florida as well, that are non-warrantable, meaning standard, what we'd say Fannie Mae, conventional review that is required for condos with certain requirements. For some reason, it doesn't meet one or more of those. That would be a non-warrantable condo, which there's a lot of as well. Today, we were talking about those actual hotel condos. It's part of a hotel. Options, we'll go over the next ones next episode. I don't see any questions at the moment, but if you do have any questions, feel free to visit our website, or our loan officers. They would be happy to help you out. And we'll see you later this week.